Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 11th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES is currently pulled back off of the previous highs here. Price took out the prior high by 1/4 of a point and then pulled back deeply to close back below the previous session's mid. That's a tremendous failure back down here. That while this still looks and appears like a pretty strong low, this low is now at risk here with the close below the previous session's mid. Now you can see that bears have defended the early pullback this morning, and what we've seen is morning pullbacks followed by afternoon weakness during much of this move lower here recently. So if we're going to see morning weakness, which we already have, followed by some, or morning strength, which we already have, followed by some weakness, then we could be looking at a push that may take us into the previous month's low. I did mention before it was curious that we would get this close and not get there, but that strong enough low looked like it gave us a shot to get 41s. Right now, if price cannot stay above the 33.41s right now, which is basically the previous key level here, we could be looking at a finish that puts us down into the previous month's low, and then we find a strong low whereby we then bounce to a different midpoint here. So right now this is going to be interesting to see how this plays out. Again, the 33.47 level is very, very important. That's the previous week's low price, and if price can't get back above that zone here pretty soon, we may be looking at a price discovery move down into the 32.54 level, which is the previous month's low price. Okay, let's take a look here at the NQ. You'll notice with the NQ, price also pushed downward after failing above the previous session's high. So it was a failed new high here where price rejected that high and then dropped downward to close below the previous session's midpoint. That is very, very bearish in many cases, especially after not reaching the 11,700 midpoint, which looked like it had a very, very good high probability shot, but in failing to hold above the low, that failed new high is now leading to a retest at the midpoint of today's range, which has already been defended at 11,327s, and that could lead to, again, a push downward in a price discovery phase into the previous month's low. The previous month's low is here, that blue line, which is 10,845 half right there. Overall, that could be the next target down. So the key level to continue to watch, 11,327s here. If price stays below that zone, we may be looking at further weakness here to take out the recent low. At some point, like the ES, we'll have to find a very strong low, and if we find a strong low, we'll likely bounce back to the midpoint of that impulse move. With the strong top in play, now we're still searching for that strong low. If this is it, then price really needs to hold 11K. Maybe a failed low today could start to turn this thing up. But right now, again, got to keep an eye on the previous session's midpoint, 11,327. Below that level could lead to a bit more weakness ahead. Bulls really need to take that level out. Okay, let's take a look now at crude oil. Now, crude oil right now is down 1%. The previous session had an inside day right here. It wasn't a narrow range inside day, but it was narrow range for much of the day before it did break downward. Now, overall, the key level here that's been in play is 37. And at the moment, it's below that level. It just took that level out and is now returning to retest it from below. 37 is very important here. As we had a tweezers bottom here and a bounce, I mentioned 37s. It kind of needs to hold 37 here for a shot to continue higher. If not, we could be looking at another round of weakness here for this one, where new lows are seen into that 35 LVN. So initially, when we failed to hold this signal here and we started to drop, I mentioned that 35 might be ahead, and 35 would be the best CLVN to look for a shot to bounce this thing, perhaps reversing it back up to this wider key range. So right now, still searching for a strong bottom. 37 is the key level here today. If price cannot get back above 37s, we could be looking at a push downward into the 35 CLVN. All right, let's take a look now at gold futures. Gold right now is up. No, rather it's down 0.6%, but higher off of the 1910s. So we have pushed higher here. We did push below the previous session's low price. Previous session's low was the 1948s, and price dropped below it here today and has jumped back above it. So that's going to be a very important zone here. Again, anytime you start moving in that direction, a failed new low can get you going again in that direction. So the initial push up, then price pulls back, failed new low here today, and then you jump higher. So that could be a jumping off point here. If price can continue to hold the 1948s, we may be looking at more upside here. But keep in mind that we are at kind of the apex of this triangle wedge here. Lower highs, higher lows, and we're right at the apex. 1950, 1957 half. That's really the apex of this pattern. So there could be nothing but chop in here for a while. It's safest to wait for expansion, or that day where we know, okay, things have changed. You know, this was one of those days where it got sideways and then boom, big day up, failed new low, and this thing just started to move. There's many days like that that we've seen where that was the day where this thing's about to move. I think we're likely to go sideways for a while until we get that day. Remember, we went sideways here for a while until we got this failed low and then that breakout day, and that was the combo here that started the whole thing. And there's many other examples going backward as well of those times where we were going sideways for much of the time here, sideways, and then you start to see the day, you know, where you start to see the expansion day and the movement out of that compression into a new price discovery phase. So right now we are firmly sideways inside a compression phase. It could continue to chop, and at some point we're going to see the day, and that's going to be the one that starts to get us higher toward 2089, 2200, and 2304. So those are the upside targets there that we're looking for. But right now, look to avoid the chop. Still has directional upside. If we were to drop hard at one point, say we take a big 1 or 2 day drop down here, this trap right here could still provide a tremendous buy for a move up the way. Not sure we get a drop of that magnitude, but just to let you know, that would still be a great trap. A failure to hold 1831s would be a major violation of market structure, and that would change and shift the bias of this trend. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.